The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 9th Turnaround Tuesday edition of the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a terrific Tuesday. Let's make sure that you and I do everything we can to make sure that this is an extraordinary day. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When we recognize that things happen for us, not to us, it means that we can find the gift in every set of circumstance that life is going to go throw at us. We're going to go find out what kind of circumstances the bulls and the bears, the buyers and the sellers are throwing out to us. Of course, most importantly, I'm grateful for your presence here today. Now, I'm here to serve you. So feel free to dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trade up 40 points, trading at 17,806. But on Turnaround Tuesday, really, it's up off of the intraday lows in the futures market, up like about 109 points out there or so. The S&P, that's up 5 points, trading at 2,084. NASDAQ Composite is flat. She's traded 5020.55. Russell 2000 is back about 95 cents. No big deal out there. That's trading at 1252. The DAX is off. Was closed down, I should say, 63 points, but that is off of its session lows for sure. Goldilocks up $3, trading 1176. Silver is flat. Light sweet crude, anything but flat, up $1.88, trading out at $60.02 out there. Currency-wise, Euro Japanese yen is pulling back a bit. We'll take a look at currencies. We'll look at the hard currencies. Leading the charge, the upside, dollar-wise this afternoon, it's Netflix up $18, up about 3%. Sage Therapeutics, that's up 14%, around $11. KC General Stores up 7.5%, up $6. LinkedIn up $6.45. Lululemon up $5. Ambarella up $5. Intuitive Surgical up $5. To the downside, leading the charge dollar-wise, you've got Intercept Pharmaceuticals. That's trading off $8. Velocity, you got Biogen off $5.70. Burlington Stores down about $5. Boston Beer, how can that be trading lower? That's off $3.78. So where do we begin? Can you say rejection out there? Rejection of a swing point. Let's go take a look at that rejection, and that is brought to us by none other than the Diamonds, the Dow Diamonds out here. We should get this sponsored by De Beers out here. Take a look at the Dow Diamonds, May 6th. That's the swing point we're dealing with. The low out there, 177.25. Volume, 7.5 million shares. Volume right now today as we speak at just past 1. It is now 110. We've seen volume of 2.8 million shares. I don't know how the next, we've got a little less than 3 hours left, but the first half of the day, only 2.8 million shares. If we multiply it times 2, we're going to get a test on light volume. Now, that's assuming that you get a close above 177.25. Anything can happen between now and the end of the trading session out here. But the low so far this morning was 177.20. 177.25 was the swing point low. We saw price spike down to 177.20. What's the expression? If you can't bust them down, price will go ahead and try to bust them to the upside. Well, at this stage here, we know yesterday we had a light volume day. Really, we've had light volume days with the exception of one out here, which was on June the 4th. Otherwise, it's basically been a light volume pullback into that swing point from May the 6th out here. So you've got a rejection now with this swing point. It's so large meaning the May 6 swing point goes from price point of 177.25 up to 180.25. You can't really wait for a full rejection in price to get above the top of that swing point. Now is the time where, if you're an aggressive trader, is where you've got to pull the trigger with your stop somewhere below a close of 177.25. Now, if price were to get below 177.25, the other area that you're looking at, let's see, did this get tested today? Looks like it did. It did, son of a gun. March 26th. That swing point out here, because that's really the next swing that you would move down to. The top of that is 177.30, so we know that's been tested. And the volume there was 6.6 million shares. So you got two swing points out here that have been tested thus far today. And assuming that you get a close above 177, we'll call it now 177.30 out there, you will have a complete rejection of this consolidated low out here. And that says that the Dow Diamonds take a run for the 181.75. Maybe they get all the way up and back into the 183.35 area. But we'll take things one moment at a time. But you've got a complete rejection out there. Now, what you'd like to see is the Dow's price oscillator squeak its head and close above the zero line. We mentioned to you yesterday that what the market's really doing, it's just forming its next bottom out here. And today on Turnaround Tuesday, that may in fact be the case. We mentioned that the Dow ought to get its price oscillator down to the minus 255. Hey, intra-session, it most certainly did that out there. Now what we're watching for is we're watching that zero line. You get a close above the zero line, it's curtains for the bears out there, because it will be the bulls that will have taken control. And of course, we know, just paying attention to that swing point, we know there was unlight volume, gives you all the information that you need to know. With regard to the other index ETFs, let's go take a look at them, see what information they're providing to us. Let's go take a look at the QQQ series ETF, trading out at 108.23, 16 million shares. What did it do today? Well, what it's done, it's also tested the swing point. Now, not the low, but May 6th is the number out here. The top of that swing is 107.95. The volume there is 43 million shares. I just rounded up just a tad. So far today, you've done 16 million shares. Talk about a rejection of a swing point on light volume. You got it in the Qs now. You have it inside the diamonds at 1:13 p.m. And it is turnaround Tuesday. Maybe it's more than just turnaround on a diamond. In fact, what we most likely have out here is an A to B equals CD to the upside that is setting up inside of the QQQ series ETF. But it was not able to bust them down any close today above 107.95. You've got a rejection of that May 6 swing point. If we go take a look at the small caps, the Russell 2000, trading off 13 cents with 15 million shares. What is it doing? It's just hanging out these highs, waiting for everybody to catch up. It's nowhere near that May 6. Well, I can't say that. I should take that back. Where's May 6? Come on, let me get May 6. Okay. It's really, it's nowhere near the May 6 swing point. That is the swing point on the IWM. The top of that is 121.49. Are you kidding me? It's only gotten down to 123.58 out here. Let me tell you something about markets. With regard to markets where there's going to be a big turn, you're not going to see the IWM hanging out at highs. It just doesn't happen out there. You'll see the IWM just absolutely get crushed. It's not getting crushed. It's waiting for everybody to kind of catch up. So don't worry about the fact that it's off like about 13 cents as we speak right now. Volume as it was pushing lower. 15 million shares today. Yesterday was a total of 18 million shares. I'm not too worried about the volume that we see here inside the IWM. What you and I know is that the IWM is trying to get up into the highs here from April 27th, from April the 15th, and they just simply need to, the IWM needs to close above 125.66. It will do it out there. There's no question about that. Of course, there's always a question about it, but I don't think that there's really a question about it. The IWM wants to head higher. If we go take a look at the SPYs out here, the SPYs, what did they do? Well, what they are doing really is they're still continuing to trade inside the May 6. So we've got a rejection in the Dow Diamonds. We've got a rejection inside the QQQ series ETF, and we got the SPYs just kind of hanging out inside that swing point from May 6, not really revealing a ton of information to you and I. 135 million shares on that May 6 swing point. We've done 59 million shares today, so you continue to trade into that swing point with light volume out there. It does not have enough to bust them to the downside. It's time to see if, in fact, they can go ahead and bust them to the outside out here. Now, what the SPY actually did What the SPY did was it came back and it tested the bottom of its TAS market profile, that low of 207.62. Now, it didn't get all the way down there. The low of that, by the way, today was 207.69. So it's really gotten down, tested support, not able to break through that support area. It wants to run higher, and where it's going to move to is at least a 211.11 mark out there. That's what's going on inside the 4 index ETFs out there. Let's go take a look at what's going on inside the currency pairs out here. Let's start off with your friend and mine. That is the euro, Japanese yen. What we took a look at yesterday is we took a look at this A to B equals CD to the upside. Those of you that wonder where's the liquidity going to come from, it's all over the euro, Japanese yen. It's all over the place out there. Plenty of liquidity to go ahead and unleash into these markets out here. The euro, Japanese yen wants to move up to the 143.97 area. Now, all that it's really trying to do, it's trying to get over that shooting star candle from that June 4th. That high out there is 141.05. So far, the high that we've seen today is 141.03. Again, the number it's trying to get into and above is 141.05. It stopped just 2 ticks below that high out there. Maybe it's getting ready to just simply catapult that, and then on its way to 143.97. In fact, I make the case that's going to head to 146.92 out there. As long as this currency pair continues to head higher, very difficult for sellers to get any kind of traction inside of this market. If we go take a look at the euro versus the U.S. dollar, what we're going to see is this is, again, make another attempt to break out of that descending price channel out here. And that's the price channel that'll take you back into the highs back last year in June of 2014. Now, we'll know if there's a real break of the euro to the upside when we see it clear its swing point for May 15th. That number out there is 1.1466. That would set up a nice large A to B equals CD to the upside. We'll deal with that price projection once we see a close above that area of resistance out there. That's what's going on inside of the euro versus the U.S. dollar. Let's take a look at the Japanese yen out here. The Japanese yen pulling back here this afternoon, I should say. Yesterday had a little dark cloud cover. Today you've got a little bit of follow through out here. That's after completing just slightly above a 1-to-1 A to B equals CD to the upside. I don't know. I'm not buying into anything that's really significantly bearish here. When we take a look at this currency pair, it looks to me like it wants to move higher. That means get weaker against the U.S. dollar and put a little bit of strength inside the U.S. dollar index out here. And that's what's going on inside that currency pair. Hey, let's go take a look at the Great British Pound. Let's wrap up these currencies. What is this doing here? Now, in the case of the Great British Pound, we've seen price pull all the way back into its swing point. I believe it's tested the swing point. Yeah, it did. I think that's the swing from the trading day of May the 4th out there. The high was 1.517. So we've seen price come back, test that swing point, give us a nice little bullish candle right here on June the 2nd. A little bit of follow through on the very next trading day out here. And what does the Great British Pound want to do? Let me pull this back a little bit further. It really looks to me like this wants to just simply continue. Well, it looks like it really wants to trade back up to its highs here from May 14th in that 1.58 area. And that's what's going on in those 4 currency pairs. Let's go take a look at Goldilocks, silver, and light sweet crude when we get back from this breakout here. This is Steve Rhodes with TFNN. Dow's up 41, S&P's up 5. We'll be right back, folks. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks, to the Turnaround Tuesday edition of the Trader's Edge Show. The Dow's up 48, S&P is up 6 points out here. Now, we know the market doesn't close right now. If it did, you would see one beautiful candle out here, and that's inside the NASDAQ composite. So if we go ahead and we put the NASDAQ composite up on my screen out here, the candle you're looking at here right now would be a hammer candle. That says that price needs to close. Price needs to do not a whole lot more from this point forward. If that body, this candle, gets too much larger than this, then it'll take away from the integrity of the hammer. But we don't know until 4 o'clock rings, until that bell tolls. We really don't know what the candle is. If it were to end in a hammer style candle out here, well, then it makes trading very easily. Number one, what we would know is that yesterday, if you tuned in, that Stevie is suggesting to you that all the charts that I read is that the market is doing nothing more than trying to establish another buyable bottom. In fact, the only thing that I wish is that we could get more bears in on one side of the boat out here. We've only got it, maybe it's, 60, 70% bearish out there. I'd like to see a ton more bears in that boat out there, just simply so that as the market forms that bottom, well, then it just things tip to the other side. Then you see that explosive move to the upside as the short covering rally continues out there. But in this stage here right now, what we know about the NASDAQ composite, what we know about the Dow, and what we know about the New York York Stock Exchange, it truly is still the sellers that are in control of this market. It will not be until we see the price oscillators get above the zero line when all points, when everything will be clear for the buyers to step right in. So, but as we speak right now, if you take a look at just simply retracements out here inside of the NASDAQ composite, let's go take a look at that. And that means we're going from that May 6th low. Looks like the high out here in the composite. Looks like it might have been the June 3rd high out here. All that we've seen is a 0.618 retracement. It looks like almost to the tick out here. 49.74 would be the number we saw low. Oh, son of a gun. Holy cow. How does that work, folks? Really? How does that work? How did Leonardo da Fibonacci de Pisa actually come up with that math out there? Pretty cool. The actual 0.618 retracement is 49.7467. Do you know what the low was this morning? Son of a gun. 49.7462. Yeah, we need to wake him up in his grave and tell him he was off by a nickel on an instrument that's $4,900 out there. In any event, oftentimes you get that 0.618 retracement area, and that can set up your next move, your A to B equals CD. You know, it can do a lot of different things out here. Sometimes it can just be a natural area to pause. Now, if there was a hammer candle that's set up inside the NASDAQ composite, the cool thing is any close below that low, if you're long, you're wrong. What does that mean? That would mean that price would go ahead and move back into test at least that May 6th swing point, probably get down to the bottom of the 48.88 level. Right now, we've got the price oscillator below the zero line, says sellers are in control out here. We've seen a nice little rising bottoms pattern out there. That says sellers really kind of don't have. What kind of talk is that? That's garbage out there. It basically says the sellers don't have any conviction behind the move. Of course, what we know about that is all you got to do is take a look at the volume inside of the diamonds, inside of the SPYs, inside of the Qs out there. There is no volume to the downside. Can't bust them to the downside. The market's going to go ahead and try to bust them to the upside out here. So that's what's going on inside of the composite. You know, and truly, keep in all seriousness here, at this stage of the game, until those price oscillators get above zero, it truly is the sellers that are still in control of the market, even on turnaround Tuesday. Of course, if we go take a look at the VIX index out here, like, let's go take a look at that as soon as I can find it. Here's the VIX index. It's trading at 1465. The key level out here is the 50-day exponential moving average. That's at 1391. As long as the VIX index trades above the 50-day, that's where some real carnage can be done to the market. So the buyers are not out of the woods by any stretch of the imagination just yet. But nonetheless, what I am telling you is this market, all the signals that are out there, is this market is just trying to find the next bottom. And it is a buyable bottom that you want to participate in. It may only last a week. Let's take a look at the facts as they are. We have been trading for basically nearly, 5 months out here. January, February, March, April, May. We're now into June. We're only in the beginning of June out here, but a little over 5 months, and the Dow hasn't budged. The composite's up just maybe a couple of percent out here. The same thing inside the Russell 2000. The markets aren't really doing a whole lot. This is a trader's market. This is an intraday market. This is a market where, there's a move. Maybe you get a movement for a week. Maybe that's the extent of it out here. And then you got to reverse courses. And that means that there is something for the bulls and there is something for the bears out here. And as long as you keep your head on straight and you know that that's what the markets are all about, then you're in good shape. If we take a look at what's going on intraday out here, we could see a break of the today's trading range. That was brought to us by the levels of 2082.2072.75. We saw a break of that just as we were coming on the air at 1 o'clock out here. The markets want to move higher. We'll go back we get back to this break. We'll take a look at the A to B equals CD price projection out there and figure out where the ES Mini is headed to. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up 41 points right now. We went to that last break. We were taking a look at the ES-Mini. That was a 5-minute chart out here. And if we just get a feel for what's going on, you know, the opening range, very cool tool out there to use. You're just looking at the first 30 minutes of the trading session. And that typically helps you to understand where the market's breaking out, or just simply trading inside a trading range band out here. Now, the trading range band today, much wider than yesterday's, thank goodness. That gave you something to trade within. And that is that the high during that first 30 minutes came in at 2,082 inside the ES-Mini. The low during that same 30-minute period, I'm talking 9:30 to 10 a.m., was 2072.75 out there. What we saw was price tried to, you know, and this is a 5-minute chart just simply so you can take a look at the number of bars out here. Now, first, the A to B equals CD pattern. Let's get right to that. If we take a look at that pattern out here, your A point's going to be down here. Your low looks like about 555 in the morning. Your B point is out here. That's what came in at between the 9:30 and 9:35 a.m. session, and your C point between 10:30 and 10:35. We can see prices made the 1-to-1 A to B equals CD to the upside. That price projection was 2084. We've actually seen an intra-session high at 2084.75. We have not seen any kind of bearish reversal signal here just yet. The move off that C to D leg is stronger than A to B. That says that price can easily move to the next level. That next level being 2087 point, in this case here, 0.75. As long as price stays above the 2082 level, that's the expected outcome. If price gets back inside the 2082 level, then that says that price can run all the way back down to the bottom of that consolidation, not consolidation, but of that trading range, the daily trading range out there in the 2072 area. At this stage, what we've got is we've got a breakout above today's trading range, and that says at this stage that the market, that the S-Mini wants higher price out there until we see some kind of failure. Now, an email came in, looks like just before the show out here, and the question is about the HUI, the XAU. I'll have to read that email further, but let's go take a look at the XAU, because I mentioned the potential for that hammer candle inside of the NASDAQ composite. Now, of course, the trading session isn't over, so we don't know whether it's a hammer or not. Hammer candles, very cool tools, because they tell you that the market is trying to hammer out a low out there, and that's why we like to use the expression, when you close below a hammer candle, if you're long, you're wrong, but you got to know what that really means. That means you fall down to the next level of support. Well, we've got a cool pattern. We got a hammer candle actually formed yesterday inside of the XAU. You take a look at that candle here yesterday. You got a very small body. You finished up at the top. That's a type 1 hammer candle out of 4, so that's the most bullish out here. And as long as you don't see a close below yesterday's low inside the XAU, that's $67, even Steven out here, then what we might be looking at is the XAU, the Philadelphia Gold Silver Index here, trying to go ahead and stage a bottom. Now, the problem is out here, as I take a look at it, let me switch over to one other screen out here, take a look at one other thing. Where are we at here? There's really no terrific completed pattern that has formed out here. The only pattern that we have is we've got a 4-wave count to the downside that actually took place here on June the 5th. So that's what you would have. Do we have a test of the swing point out here? No, we don't have that. That swing is March the 11th. Nonetheless, the XAU is in fact trying to hammer out a bottom out here, and that hammer is still intact as we speak right now. Of course, in order for the XAU to really get some legs out here, it's going to need Goldilocks to start participating and create a bit of a rally out here. It's up $3. If we take a look at Goldilocks, all gold has been doing is trading between the 1160 and 1224 area, give or take a buck or two every now and then. So it's a narrow banded range out here. I think until we see gold break any of these levels, it makes it suspect with regard to the rest of the gold miners out there, because the gold miners are not going to be able to break out topside until you see gold break out topside, and it certainly has not been able to do that for quite some time, regardless of what the U.S. dollar index is doing out here. Gold is underneath the thumb and the pressure of someone out here, and it is the hold. It will be a bang. I just don't know which way it's going to bang, whether it's to the upside or to the downside out there. And the question that came in was about the commitment of traders data, which I did not get a chance to take a look at over the weekend, so I can't tell you whether there's been any significant change there. What I can tell you, as of the prior weekend, the information that came out was there was no inconclusive would be the proper word to be able to use for it. It didn't tell you what large commercial traders, they didn't have a feel one way or another as to what direction gold was going, and that's never a good thing. So they basically were agnostic as to the direction, just as maybe they're struggling to read what the heck is going on when we look at the what gold has done here for the past couple of months. So, but you do have a signal from the XAU. I don't know if that's an early signal as to what gold may want to do or not out there. With regard to silver, we're basically looking at the same thing. It's flat here today. What silver has done, has it done it? Yeah, it's come in, it's tested that swing point low from April 24th, the top of which is 1592. So we've seen the test of that area, but we haven't seen any kind of bullish reversal signal. The cool thing about the direction of price out here is price can continue to move higher and it won't move lower or even have a chance to move lower until you see some type of bearish reversal signal. You like to see those complete at a pattern out there. Maybe it's a lightning bolt, maybe it's a Fibonacci retracement, maybe it's a Chapman wave, maybe it's a Rhodes momentum indicator signal, maybe it's a test of a swing point. Whatever it is, you like to see those things conclude with other areas of pattern completion out there. In the case of silver, we really don't have it as we speak right now until you see the bulls come out. It says that silver can easily go test the 1559 level. That's the low of that swing point from April 24th out there. With regard to light sweet crude, let's go see what it is doing, up $1.97 as we speak right now. Having a nice day out here. Light sweet crude has just simply been hovering between the $57 to $63 area. Really got to ask needs to clear that $63 a shooting star candle out there. But price basically has been working its way off its overbought condition by just simply traveling sideways out here. What you and I know is that's the most bullish thing that price can do when it gets overbought or oversold, is just simply travel sideways out there. And that's what's going on in the case of light sweet crude. So we've covered the index ETFs. We've covered the currencies. We've taken a look at a couple of the commodities out here. Let's go take a look at what's going on in a couple of these stocks out here. Let's go see what's going on inside the leader of the upside, Netflix, up $19 basically, just underneath that. Nice wide-ranging bar today. Volume inside of Netflix is 2 million shares. Yesterday did 1.5, the day before 1.6. With regard to Netflix and where it's headed to, that's an excellent question out here. I would have to say, what would I say? I'd say let's go look at a monthly chart. Maybe we get a better read and a better feel for any kind of lightning bolt pattern. Maybe we don't. But let's go take a look at the lightning bolt pattern that is out here. This is a longer-term pattern. The A to B equals CD inside of Netflix. Your A point looks like it's somewhere down here, maybe in August of 2012. That becomes your A point. It will become it as soon as it actually connects on my system. There we go. There's your A point. Your B point out here that we would use, you've got to come and use the swing from February 2014, and your C point down here, April 2014. So Netflix looks like it's targeting the 704.48 level, maybe even higher than that, 814.63. When you look at that monthly chart, there is nothing bearish about the Netflix out here. Let's go take a look at the number 2, Sage Therapeutics, SAGE is the ticker symbol, up 12% out here. Looks like they had an announcement on one of their drugs. This is still the monthly chart out here. This has been basically a little rocket ship. The IPO takes you back into July of 2014. The low was around $24. The high is 84, or it's trading 84 right now. The actual high out here is in the $89 area. That looks pretty good from the monthly chart perspective. Let's look at the daily out here. Oh, how about this? So the daily chart would actually, some people would take a look at that candle and say, oh, hold on a minute, Steve-O. That looks like a shooting star. And I'd have to say you're right, except for the mere fact that it gapped up this morning. Because if we don't account for that gap up here, it always makes either those hammer candles, when you have a gap to the downside, suspect, just as a shooting star becomes suspect when you've got a gap up. And you can see that yesterday the intra-session high was 81.18, and today's intra-session low 82.83 out here. So, and it would not be a hammer candle if it just simply had opened or came down and tested the high of yesterday out here. And nonetheless, it still looks pretty strong. You've got a nice volume day inside of Sage Therapeutics out here. Let's take a look at KC Stengel, KC General Stores, CASY is the ticker symbol, up 7%, up $6. This is gapping up here this today. Boy, what a sign of strength this had on the trading day of May the 15th. Talk about wide-ranging bars and accelerated volume. That fits the dictionary definition of that. And then what do you have today? Well, today you've got accelerated volume. You had wide price spread, but basically the body of the candle is the essence of price out here. And the body of the candle is, well, you know what the reality is? It is still a wide-ranging bar, because we have to take a look at yesterday's close and paint in the rest of the bar. So you've got a nice wide-ranging bar here. Price, for whatever reason, unable to close above this January 26th level. That only had 281,000 shares. You've done 790s too as we speak here at 1:44 p.m. That would set up one huge gargantuan A to B equals CD to the upside by being able to take out that level. When I say gargantuan, what I mean here is that your A point is down right around the July 2014 time frame. Your B point is the swing we looked at from January 26th, and your C point down here is down around the lows from April 30th. Uno to uno, 1 A to B equals CD says 109.91. You're trading right now at about $93 out there. In fact, I could make the case that if you take out that 94.67 level, you will do more than a 1 A to B equals CD to the upside. And that is on Casey General Stores out there. Let's take a look at LinkedIn. LinkedIn had got totally trashed a few weeks back, if I'm not mistaken. And when I say trashed, I mean this thing had gapped down with humongous volume. That was on the day of May 1st, May Day out there, 16 million shares to the downside. Now you're inside of this gap out here, which makes it very difficult to trade, very difficult to navigate these waters out here as to where it's going to run into resistance. The best that I can say is that resistance takes place at about the 238.20 level, and that is where there's a bit of a supply line out there. That is on LinkedIn, LNKD. If we go take a look at Lululemon, LULU, having a nice day today, up 8.5% of $5 and change. Let's go take a look at where this thing is running into resistance, if at all. Lululemon. I'll say it one more time while I get a swig of Lululemon water out here. Lululemon's got a swing point high, it looks like, on the trading day of April 10th. 2015. Now, volume out there is only 2 million shares. You've done 10 million shares today, but you have not gotten to that swing point. So there's really no release of information. What Lululemon needs to do is get up to $68.84 or even $70 even Steven. That is the high from April 10th. You clear $70 with more than 2 million shares out there, you'll get a lightning bolt to the upside inside of Lululemon. Otherwise, right now, that becomes your resistance area, and this becomes range bound in between the $58 area and the $70 area inside ticker symbol LULU. To the downside, let's go take a look at Intercept Pharmaceuticals, ICPT, off 3%, down $8 and change. What is this doing out here? Intercept Pharmaceuticals looks like it's coming back. Maybe it's coming back into the breakout area. That would take it to the top, the high of the trading day from November 7th of 2014, around 208.90, because in essence, Intercept Pharmaceuticals began breaking out from that downdraft back here on February 17th, 2015. So Intercept Pharmaceuticals is below a swing point out here from April 30th. That at 596,000 shares. You're down below that with light volume. So the question becomes, where is this thing headed to? And at this stage, right now, just coming back into a breakout area. ICPT is the ticker symbol. Burlington Stores, BURL. That's off about just under 10%, down $5 and change. And this has got some volume behind its move out here. This is confirming an A to B equals CD to the downside as we speak today. Price projection of that A to B equals CD pattern 1-to-1 is going to take us down to what's it going to take us down to? The high here, 55.29 and 55.07. We'll go with 55.29. That's the high from May the 19th. 1-to-1 is going to take you to 43.86 out here. And that's the current price projection inside of Burlington Stores out here. Not that it can't go lower, but that becomes your first price projection. Ticker symbol there again was BURL. Let's take a look at Biogen, BIIB, off about $5, down 1% out here. Looks like Biogen is, what is it doing? Biogen came back to a breakout area that was on the trading day of January 30th that had 4 million shares. Came back and tested that area with what? Light volume. 2.6 million shares. That was on April 30th. Now, hasn't been able to do a whole lot of budging to the upside. Keeps running into resistance for the most part inside its TAS market profile high. That's out at 400.36. Pulling back as we speak right now. Volume-wise, though, 807,000 shares versus 2.6 million shares from April 30th, 2015. Forget about the breakout volume, which was 4 million shares out here. You're talking about a pullback inside Biogen with light volume. Nonetheless, it still needs to test the 372.75 mark. As we speak right now, the Dow's up 20, the S&P is up 3, composites off 4, the Russell 2000 is down about $2. Steve Rhodes with TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 18. The S&P is up 3 points. A question from Danny in Atlanta about natural gas out there. So let's go take a look at the current contract for natural gas. That is the July contract. That is what is active. Having one heck of a nice day out here. Now, I don't know if Danny's out looking to get in, what he's doing. Let's take a look at what we do know here about natural gas. Number one, natural gas is not exactly following the seasonal pattern that it has over the course of the last 11 years. What I mean by that is, if we take a look at this slide that Stevie will put up, here's the typical seasonal pattern for natural gas, and that is that it makes a low in the April timeframe and then makes a high for the season right around, in this case here, this would be right around the June 18th timeframe. So we're really starting to get inside that window. We may not be there yet, but over the last 11 years, natural gas just simply peters out in the middle of June. In fact, natural gas continues to move lower in through the September timeframe out here. Now, with regard to the patterns, if we take a look at natural gas, it actually made a low back here on April 27th. Remember, I said seasonally it makes a low in April. Typically, it's in the earlier part of April. This year happened to be April 27th out here. What we know about natural gas is it came back and it tested the swing point out here, Danny, from April 27th, the top of which was $2.58 out here. Couldn't bust them down. You've got a couple of nice reversal signals inside of natural gas. If we just take a look at natural retracements here from the high, that'll key reversal session on the trading day of May 19th. That's going to be your resistance. You're above the 0.382. You've sliced through it with a wide-ranging bar. That says to me nat gas on its way to 292, probably 302. Or really, what it will do is just simply go ahead and at least test that swing point from May 19th. If you get it close inside of 2.98, that says you can test that high of $3.15. That's what's going on, as far as I can see, inside of natural gas out there. So let's summarize where it is that we are in the market out here. What is it that we know as of 1:56 p.m.? Well, the one piece of information as we put together this puzzle in the markets for both you and I is the Dow Diamonds have tested the swing point low for May 6th. They've done it what looks like to be with light volume out there. 7.5 million versus right now 3 million shares, and unless all heck breaks loose out here and you see it close above 177.25, we'd like to see 177.30. You would have a rejection of a swing point on lighter volume. That says that if you can't bust them down, price will bust them to the upside. Now, that's one thing. That's one piece of information from the Dow Diamonds. You want confirmation. You want me on that wall. And that wall, by the way, is the summation index. It is the price oscillator out here. And that says that the Dow has its work to do still. So you've got one piece of information. The confirmation would come when that price oscillator gets above zero. And it does not look to me like that is going to take place today. So if you're an aggressive trader, recognize that you do not have a confirming signal here as of yet inside of the Dow. With regard to what's the second piece of information that we have out here? Well, the second piece of information was where it was in the Qs. Let's go take a look at the Q series. So what you're looking for here inside the Q series is a close today above 107.95. You're trading at 108.11 out here. If you close above 107.95, you're going to reject the top of the swing point from May 6th, which had 42 million shares. You've only done 18 million shares today. You would have a rejection of a second swing point with lighter volume. Those are two classical piece of information, not to be confused with classical gas versus natural gas out there. However, the reality is what you would then want to also see inside of the price oscillator is the NASDAQ composite. Even though it's a little and slightly different, you want to see that price oscillator get above zero. That's pretty easy to do out here, but that's what you'd want to see. Then, of course, if you can get the composite to close somewhere around the 5,025 level, you may have a hammer candle. But stay tuned, because the lovable squeezably soft David White is up next. So have a terrific Tuesday. On this Turnaround Tuesday, I'll be back with you on Wonderful Wednesday. Have a great day, folks. Look forward to seeing you soon.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching TigerTV.